Welcome. In this video, where are the return locations for ZBCN coin? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we examine the chart in detail, we can see that there is an ascending trend line that has formed quite prominently in the medium term. This trend line was a strong structure where the price reacted upwards with support many times before. However, in recent price movements, it is possible to clearly see that this rising structure has broken down and the price has broken this trend line downwards. Such trend breaks are one of the first major signals that the psychological balance in the market has been disrupted and the buy side has lost its power. As a matter of fact, this breakout is not only a technical break, but also a break in investors' expectations. Because while an uptrend represents a price structure controlled by bulls, a downward break of this trend indicates that sellers are now in charge and bears have started to have a say in the market structure. Following a break of the trend line, one of the classically expected behaviors in the market is for the price to retest this important support line from above, which is called a retest. This test helps us to gauge whether traders are now accepting this level as resistance. As the chart shows, after breaking the rising trend line, the price made a bullish move back towards this area and touched this old support, new resistance line. This is considered a very critical point in technical analysis, because if the price turned back down after coming to this line, this confirms that the trend is now permanently broken and the dominance of sellers has been consolidated. This retest is a textbook example of a technical move in the classic sense. The price has once again tested the broken ascending trend line and was rejected from there, as expected. This rejection gives us a clear clue about the general direction of the market. Such unsuccessful retests, especially after trend breakouts, significantly increase the chances of the price starting a new downward wave. And at this point, that's exactly what happened. The price reacted weakly to the upside after the retest, but the seller's pressure prevailed and a sharp retracement took place from this area. Not only was this decline technically expected, but it also signaled to traders that a new trend reversal may have begun. This decline should also be carefully monitored on larger time frames. This is because trend breakouts and subsequent sell-offs following retests are usually not just a short-term correction. On the contrary, such technical patterns can also signal the start of a new downtrend where the price may test deeper support levels. If the price is unable to break back above the trend line and hold on to it, then we are entering a scenario where the selling pressure will deepen and investors' risk appetite will be further diminished. In this context, it is of great importance for both short-term investors and participants who take positions in the medium and long term to carefully monitor these developments in order to reevaluate potential support levels. As a result, as we observe in the chart, the price broke down the rising trend structure that it had previously maintained quite firmly and then performed a classic retest by pulling back towards this broken trend line. This retest process was completed when the price failed to break through this level, and then the direction of the price turned down again and started a significant decline. From a technical analysis point of view, this move is considered a very cleanly executed pattern and provides traders with strong signals of trend reversal, but we can't decide the analysis with trends alone. Let's look at other metrics. Stay tuned. When we carefully examine the chart, when we apply Fibonacci retracement levels based on the price's decline from a certain top to bottom, we see that 0,618 and 0,786, two critical levels frequently followed in technical analysis, come to the fore. These levels are not just mathematical ratios, they are extremely important technical barriers that are shaped by the collective psychology of market participants and directly affect their investment decisions. In particular, the 0,618 level is the reflection of a mathematical structure, also known as the golden ratio, which repeats in nature, art, and even in the human body. Therefore, when the price approaches this level, it usually meets strong resistance. When we go back to the relevant chart pattern, we observe that the bullish move touches exactly these Fibonacci retracement levels and then reacts significantly. In fact, this once again demonstrates how functional and predictable technical analysis is. Because even before the price approached these levels, traders who were familiar with Fibonacci analysis may have predicted that these areas could be a potential resistance point and shaped their positions accordingly. This was clearly evidenced when the price turned downwards without lingering at these levels for long. The increase in volume and the reversal signs in candlestick patterns, especially at such levels, are an indication of the importance of these areas in the market. This example on the chart also reminds us how important it is to read price behavior. Fibonacci levels are not just mathematically determined lines, but also decision points in the collective subconscious of traders. If the 0,618 level could not be crossed and the price bounced sharply from there, this indicates not only the weakness of buyers, but also that sellers took active positions to defend this level. Similarly, the 0,786 level is often considered the last line of defense. If this level also fails to be breached, we can predict that the current bullish move of the price has failed and a new bearish wave may begin. This is exactly what is happening in the current scenario. The price has reached these two levels, which were determined by the Fibonacci retracement tool pulled from the top to the bottom, where it clearly encountered resistance. Especially after reaching these levels, the price lost its upward momentum, the candlesticks showed signs of weakening, and the subsequent wave of selling confirmed that technically these levels were indeed functioning as a strong resistance area. If the price had been able to break these areas, then a move towards higher resistance levels could have been expected. However, since this did not happen, investors' attention has now turned back to the support zones below. In addition, the character of the pullback that follows the operation of this resistance level is also very important. If the decline was heavy and voluminous, this would indicate how dominant the sellers were. However, if the decline was weak and without volume, then the possibility of a second bullish move from this area should not be ruled out. In such cases, one of the things that traders should watch carefully is whether the price will test this resistance level a second time. This is because sometimes the price may approach such important levels that it failed to cross on the first contact after a short correction. The second contact is usually more challenging, and if a successful breakout occurs, the upside could be significant. However, in the current situation, the price seems to have gotten the expected reaction from these 0,618 and 0,786 levels. That is, the price was rejected at these two important resistance points and started a downside move. This tells us that the market has taken these levels seriously, and there has been intense selling pressure from these areas. If such areas are tested again in the future, investors should watch them carefully again. Because in technical analysis, if a level has worked before, it is possible that it will work the same way when it is tested again. However, if more buyers step in this time, a breakout may also occur. Therefore, it is essential not only to focus on the levels, but also to get support from volume, momentum indicators, and candlestick patterns. Looking carefully at the chart, we can see that the price is currently approaching an important technical level. The line representing this level symbolizes an area where the price has touched and changed direction several times recently. Such levels are considered critical thresholds in technical analysis because the vast majority of market participants consider these areas as potential reversal or breakout points. At the moment, the price is moving right above or very close to this line, and the actions taken here will play a decisive role in determining the next price direction. In addition, in such breakouts, it is not only important that the line is broken, but also how the breakout occurs. In other words, if the breakout occurs on volume, strong and decisive, it is considered a much more reliable technical signal. If the price breaks below this line on low volume or weak candlestick patterns, it could be a fake break. However, if a hard break comes on high volume, then the probability of a continuation of the downward movement becomes stronger. In this case, the next area to watch technically is the support levels in the lower zones. These levels may be areas where the price has paused in the past, changed direction, and strong buying has come in. So if the price breaks the current technical line downwards, the market's next target will be this lower support level. This support point is usually an area where traders reposition to buy, stabilizing the price and triggering reaction buying. However, it is important to remember that many other factors also influence whether the price can reach this support area. For example, external factors such as the overall market trend, macroeconomic data, investor psychology, and news feeds can also directly affect the operation of technical levels. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.